Hello everyone and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Monday the 28th of April. The situation in the Ukraine has fairly deteriorated over the weekend, and there are reports that of kidnappings of European military observers are certainly not helping the situation, and it looks like further sanctions are going to be placed upon Russia in the coming days to further increase the pressure on them to try and diffuse the situation. But at the moment, certainly this is an ongoing issue that has continued over the past few weeks and is showing certainly no signs of improving whatsoever. That is having an impact on risk appetite. The dollar is being hit quite hard today. In fact, pretty much offside on against virtually all the major pairs today. Euro and sterling quite strongly higher, as is the dollar. The Aussie dollar, and also we're seeing the Swiss franc as well, quite strongly positive against the dollar as well. So a lot of currency moves in as the European trading session has gone underway. Furthermore, you've actually got some positivity actually in the European stock markets, and that has happened broadly because of M&A activity around the pharmaceuticals and industrial sectors around Europe. So that has certainly helped the M&A driven moves of recent days to continue on these stock markets, and whether that does so continue remains to be seen, because you do have at the moment the situation whereby you've got the VIX volatility in the States, which is beginning to pick up once more. So we had that bottoming out, and if that continues to move higher, then that could continue to be a problem for stock markets once more. You did see the S&P 500 close quite sharply lower, about 0.8% on Friday. So that could be the situation we're seeing. The dollar, as I said earlier, is falling away once more, and it looks like it's coming back towards the test of these that March low and that key April low. So that continues to decline as we see in the early European trading today. The key bit of data we need to be watching out for this is the first bit of data on a very hectic week for macro data. You've got the US pending home sales. That's set to come in at 95.3, which is actually 90 up from the 93.9, and would actually be the first month of an improvement in this since June last year, when it peaked out just around about 110.8. So that'll be interesting to see if it happens today. That could signal a bit of return of support for the dollar, but at the moment certainly the dollar is under pressure as we speak. My chart of the day is the FTSE 100. The FTSE 100 has had a positive run, but looks like it may be running out a bit of steam on the upside as it's approached this resistance level around about just above 6,700. Actually the reaction today has been fairly positive. However, I'll show you on the intraday chart that there is a possibility of a top pattern in place now. I've gone back quite a long way on the intraday chart, basically to highlight this Fibonacci level, the 61.8% Fibonacci level, which comes in at 6723, and that pretty much saw the peak back the other day on Thursday, and so we'll certainly be watching out for that. That is a key resistance level now intraday. I will just zoom in slightly here. And you did have a head and shoulders top pattern that was completed on Friday intraday, although there was a sharp recovery to the upside, and again today. But certainly, if this resistance around that top at 6,725 is pretty much the level. If that remains intact as a resistance, then the possibility of this turning into a bigger top pattern could continue. The momentum indicators have actually turned round as this rally has taken hold, and the FTSE's up around 25 points at the moment, 6,710. So it's actually having a fairly decent day and decent recovery in since Friday afternoon. But certainly, if that 6,725 mark isn't taken out soon, then you could see a top pattern forming, and with this Ukrainian situation, possibility of that escalating further throughout the week. If further sanctions are placed on Russia, then there could be a correction in these stock markets. As I said earlier, watch out for the VIX volatility index climbing to possibly give you an indication as to whether this is going to be a correction or not. Okay, so I wish you good luck in your trading on FTSE today, and I will speak to you later. Thank you.